Contrary, no. The ayes have it. The bill is set down for third reading next sitting day. Call Government Order of the Day number 2.
Financial Reporting Bill, first reading.
Mr. Speaker.
Honourable Craig Foss.
Thank you, Mr. Speaker. Mr. Speaker, I move that the Financial Reporting Bill be now read for a first time. I nominate the Commerce Committee to consider the bill. The bill rationalises financial reporting obligations across the statute books in 3 ways. First, it makes all reporting obligations consistent with the goal of financial reporting. That goal is to provide information to external users who have a need for an entity's financial statements but are unable to demand them. Second, it standardises the interface between the Financial Reporting Act and other acts. It does so by placing core definitions and provisions that will have broad application to reporting entities in what will become the new Financial Reporting Act, and by placing all substantive reporting obligations in other industry, sector or entity-specific acts. Third, it makes the language of financial reporting in different acts broadly consistent. This change is needed to replace old-fashioned concepts in acts that were passed prior to 1993. It is also needed to recognise the fact that some existing provisions are no longer needed because those issues are now fully addressed in accounting standards issued by the External Reporting Board, or XRB, it is also known. The Financial Reporting Bill will replace the Financial Reporting Act 1993. It includes 2 major changes for specific classes of entities. The first is to remove the requirements for medium and small companies to prepare annual reports, including financial statements. Those changes appear in Subpart 3 of Part 4 of the bill. The main purpose of a company annual report is to provide accountability by senior management to shareholders. But the great majority of New Zealand companies are SMEs, and the managers of the companies are also shareholders. So they already have access to the company's financial information without waiting for the annual report. The New Zealand Institute of Chartered Accountants agrees that this reform is needed. NZECA describes the current requirements as, and I quote, expensive and time-consuming, and the reforms as a welcome reduction in red tape for many businesses. The SME changes mean that the Inland Revenue Department will need to beef up its company tax filing requirements. I understand that separate empowering legislation will be introduced by the Minister of Revenue at a later date. The net effect will be reduced compliance for many companies. The bill also adds a power for the XRB to issue accounting standards for registered charities. These changes appear in Subpart 2 of Part 4 of the bill. Registered charities are required to attach financial statements to the annual return they file under the Charities Act. However, the absence of accounting standards has led reporting by some charities that is inconsistent with generally accepted accounting practice, or GAAP as it is often called. Clear rules are required to improve the clarity, the charity reporting and increase comparability between charities. The XRB has stated that it is planning to introduce simple format reporting for 95% of charities. This change will benefit the many preparers who are volunteers with limited accounting or bookkeeping skills because it will reduce uncertainty about what is expected of them. A further change will be to remove the inconsistencies in the way that financial reporting is currently provided for in different acts for different classes of reporting entity. There are 3 different approaches at present. Most reporting obligations for issuers are to be found in the Financial Reporting Act 1993. The reporting obligations for companies also appear in the Financial Reporting Act, but the auditing-related provisions appear in the Companies Act. The obligations for all other reporting entities are largely found in other acts. The consistent approach in the bill is to place standard definitions and provisions in the new Financial Reporting Act. Those provisions appear in Parts 1 and 3 of the bill. For example, Part 3 includes a standard provision for auditor qualifications that will apply to most statutory audits other than audits of financial statements prepared by issuers and public entities. This provision will replace numerous existing provisions in other acts. Subparts 1 and 2 of Part 2 relate to the XRB and its statutory functions, powers and responsibilities. Those provisions are similar to the current provisions in Part 3 of the 1993 Act, as amended by the Financial Reporting Amendment Act 2011. There are some changes that will make the XRB's functions fully consistent with the contemporary domestic and international accounting standards environment. For example, Clause 11C includes a new power for the XRB to issue authoritative notices. This change will, amongst other things, allow the XRB to issue New Zealand equivalents of conceptual frameworks published by the International Accounting Standards Boards and the International Public Sector Accounting Board. Part 4 and Schedules 1 and 2 propose amendments to more than 80 other acts. The most significant changes appear in Part 4 of the bill. Schedule 1 includes other amendments, and the consequential amendments appear in Schedule 2. Most of the provisions in Part 4 and the two schedules state whether entities or classes of entities are required to prepare financial statements in accordance with GAAP, and, if so, whether the audit and publication of financial statements are also required. Many of those amendments relate to acts that require financial statements to be prepared, but include no explicit requirement to prepare them in accordance with the accounting standards issued by the XRB. This is a particular issue with acts that predate the Financial Reporting Act 1993. The bill proposes amendments to those acts by making it clear that the financial statements must comply with GAAP. Part 4 of the two schedules include provisions stating that audits must be carried out in accordance with auditing and assurance standards issued by the XRB. Finally, I wish to draw the House's attention to Supplementary Order Paper number 93, which was tabled on the 31st of July 2012, the same day that the Financial Reporting Bill was introduced. This SOP relates to financial reporting by issuers, banks, insurers and other financial market participants covered by the Financial Markets Conduct Bill. These changes are included in the SOP rather than the Financial Reporting Bill itself, because it would have been inappropriate to introduce the Financial Reporting Bill in a form that anticipates that this House will pass the Financial Markets Conduct Bill. Tabling SOP on the day that the Financial Reporting Bill was introduced will provide the Select Committee with the opportunity to consider the financial reporting system for financial market participants as a whole. At present, there are substantive reporting obligations for financial market participants are in several acts. SOP 93 proposes that the reporting obligation for all financial markets conduct reporting entities would ultimately be consolidated in the Financial Markets Conduct Act. This change will bring conventions of financial reporting obligations by financial markets conduct reporting entities within the FMC Bill liability regime. Mr. Speaker, to conclude, the bill and the SOP are a once-in-a-generation opportunity to update financial reporting law and to make the reporting system fully consistent with the goals of financial reporting. It includes very important compliance and cost-reducing changes for medium and small companies. It also includes changes that will improve the quality of financial reporting by registered charities. Mr. Speaker, I would also like to acknowledge the collaborative nature and the cross-party support I believe that this bill carries with it, and I fully acknowledge that collaborative spirit for this and other bills. Mr. Speaker, I commend this bill to the House.
The question is that the motion be agreed to. The Honourable David Parker.